Hey Lucas, so this is so we were talking about I just want to, maybe do a quick video here about this particular setup. If you're going to playbook it and if we're going to maybe focus on this so we can maybe get better at catching them. And sort of to summarize here the variables. And it brings me to one thing. I'm recording this as much for you as for myself because this helps me. This is something that I fail at all the time. And, you know, this particular thing, which is like we have some structure here, it fails and it comes back and reclaims a vpoc. That's like the building block. It gives us a sort of like a technical um, sequence of events that make for a good entry, but it's not the setup in itself. We need to zoom out always, and things we need to see them in context. The main thing here is that we're going from the low 700s, which in the past 2, 3 days, whatever, it keeps coming up because it's the most important level um, that we were trading in, right? So that's why, 730, 750, these were all like important levels, right? And then we have this um, vacuum here, right? Where there's a lot less liquidity. And then we get to this VPOC here. This is what they call a double distribution. And this is where we get this sort of higher liquidity area here, which is basically the 900 area. But it starts here in the 880s, 890s, and then 900s. So this is a target area for basically for, if we go back to the 1 minute, this is basically moving from this area, the 700s, into that very important area, which is the 880s, 900s. This is a high liquidity area, and it's like a destination point. It's a target area if you're putting on a trade, but it's just a destination. It's moving from here to there. So there are 5 second chart, there are setups here. Basically at the reclaim of 700 because we had broken below that level. 1 minute, we had broken below that level, I guess, yesterday on Friday. What day is it? Is it Monday? Yeah. So on Friday, we okay because of the situation over the weekend, we got the gap down, right? Into the 300s. It was bought up, and basically we're coming back up into the 700s to reclaim. And then here we fail, but we come back up. And this is sort of an iteration of the same principle, which is a failure. We don't have really a breakout structure here, but still, it's like, we tested, we exhausted into that area, we broke below trend, failed, and then this got saved and then comes back up. So this is volume that is trapped, and then at the open, we are testing again there at the low 700. So 5 second chart now. So there are setups here that are like the reclaim of that area. Um, and they're like you know, it's there's no so there's chop around here, and at the open, for example, we kind of took out the 750s in some fashion, but at the open, I had a short bias, for example, because this was topping out here in the 750s, and then we get this selling off into the low 700s. So because basically the principle there is that this is a target area. This is an area that, well, it fell below that area and now it's coming back, we have basically a rally. 1 minute now. We have basically a rally that's literally here from the Um, from the it made it down into the 300s, I guess. Oh, 500s? No, it was, the gap was here. From down here, all so it's a big rally, right? It's um it's a 300, 400, 350 whatever point rally up into back into the 700s, right? So this is like a target area. This here it could be just topping out. It could double top here. It could exhaust and then it can go back down. So back to the 5 second chart, um, that was sort of the bias at the open. And so I was scalping this um, off of this when I saw the selling here in the 750s, 760s, and I scalped towards the downside. There was this VPOC here kind of shows you that there was some volume there, and there was a really important level of 730s. Um, because I did scalp off of the 730s to the upside a couple times here, but then when it breaks below 730, and then we had a sort of a flush here or a sell off here into the low 700s. And as expected, we get a bounce there. But, as long as we are here in this range, 730s to 750s, we're still in that area of liquidity. We're still in that target area. This is a risk area. This is not an area where you're going to be, oh, I'm just going to go for continuation. It's going to keep going. Or you're going to be buying a breakout here. No, because it's it's not a high odds setup. This area needs to be taken out, reclaimed, confirmed that there's a reclaim. And that's what ends up happening here. So it ends up, and there's no real like tradable. This was like when it takes out the highs, this was I could have joined because it has somewhere to go into the 800s. 800 was a key area, key level, but it didn't give me like the structure for with a breakout to take it. And then the 800s was a potential top. Um, so that's the kind. This one's difficult, but then here we get the first sort of like trappy action. This consolidator here fails, but then they saved it, and then it trapped. And when it traps, bam, it pops up here into the whatever 820s, 830s. And this is kind of like the beginning of that type of pattern, of that type of action. And this also kind of like, um, cements that this is now we're leaving this area behind. This is a proper breakout. You know, if we had any doubt that this was it, if it didn't, it tried to roll over and fail, and it didn't, and bam. So now we are officially out of that area. So now the new target area comes into play. We have a new target. We've had a breakout. We have momentum to the upside. Every one of these like flushes is being saved and bought up. Not, it didn't just happen there. It happened here. Look at the volume there, soaked up, and then back up it went, and then it makes this move. So we're clearly now heading into the new target area, which is now, and when we had, and then if we zoom out, we know it. It's the eight, the 25 880s to 25 900s, that area. um, we get some more rolling over here. It gets saved here again. Traps volume, reclaims this hugely, very clear VPOC here, and bam, then we get the momentum to the upside. Um, again, the way I played it, I waited for exhaustion, waited for this candle here, waited for trap, and then it did pull back a little bit, but then reclaimed this VPOC here, 857, 858, and when it did, bam, it went 20 points. And here, 880s is basically the edge of that target area. And that's why I took this with confidence, but it's why I was a little bit wary of taking this one because I thought maybe it doesn't make it to 900. Maybe it just taps 880s and fails. It ends up going into the 900s. Um, but this is a little bit more risky than this one. But this is clearly something I was a little bit jealous that you took it. I couldn't, and I chose not to take it. I could have taken it. But as you can see, it was also a little bit more. This one was immediate. This one was consolidate, chops a little bit there before the below the trend line. When it breaks out, it just goes clean momentum. Here, it chopped a lot because it wasn't as clean. Um, but anyways, um, what are the variables of this setup? Well, the variables are that we have some sort of breakout structure, that it was ready to break out. In this case, we could have seen this here, or we could have seen this with this trend line here, or down here, we saw it here with this trend line here, where we saw some structure that was, it was ready for continuation to break out, but it kind of rolls over and it fails, but then it is saved. They, whoever it is, these evil magicians of the market, they 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 save it from selling off. They trap the volume, people that are now shorting here because they think it's already a short, and they gap it back up. Typically, this is a strong momentum move to the upside, and that's a tell. So then when it's, you already know, you don't even have to wait for this VPOC to be reclaimed. You can buy it right away because you know this is going to happen. So that's like the technical setup. That we saw the same thing happen here, and we saw the same thing happen here, and then we saw that's it. Yeah, that's it. But the most important thing is not just that, it's that we have somewhere to go. That we already left behind the previous area of liquidity, and this is in a clear trend to the next one. So, and if you can see this, this looks quite choppy, right? So it's better, it's not that obvious that it's a trend, but every time that it tries to roll over, it traps and then momentum to the upside. Traps, momentum to the upside. So you already see, once you see it happen once, remember that pattern recognition thing where you don't have to wait for extra confirmation. You see it happen once, and then you see the next one setting up. You already know that you have a pattern. This thing is strong to the upside, and we've already left the previous area, so we have somewhere to go. Now, um, the ones that are up when we're approaching that target area, which is again 880s and 900, those are the most powerful ones because we're within reach of those levels. So that breakout is going to happen, and we have a target area, clear target area to take it off. But once we're in that target area, then it becomes more risky. In this case, this one works out. It plays out well, but okay, it's already into the 920s, 930s. Typically, yes, we do see overshoot of 20 to 30 points into these very, very, very high liquidity important levels, whole numbers. But textbook, it didn't really quite, it tried again. This is the trade that you took. It tried again, and it double topped. It went maybe a little bit higher than this one, but it got rejected. Look at that volume, exhausted hard, and it's making lower highs here. This whole area is now, this is exhaustion. This is exhaustion um, drawn out, right? So it's exhaustion. If we'd have to see it in a higher time frame. Let's go to like a 10-minute. If you see this on a 10-minute, then it looks like more like, big wick here and then bam, red, and now making lower highs. On a higher time frame, clear and clean. Exhaustion into that area and going back down. So yeah, we're joining trend into that area, but when we're already in the target area, that's the most important variable. And that's where we can get trapped, because if we are on our way to that target area, there's a lot of edge. But when we're already in target area, geez, that's pushing it. 5-second chart now. That's pushing it. And that's risky. And that's like, again, this one played out. I didn't take it. You took it. And this one still has a lot of edge because we hadn't touched yet 900. And there's always a very good chance that we're going to at least overshoot by a few points. And that's exactly what happened here. But that's it. That's your exhaustion. You're already 20, 30 points above from the target level. You cannot keep pushing for continuation because that's the edge is gone. Here, it was a gamble. Here, good for you, it played out, but as much as it did play out, it was a 50-50. It could have not played out. You could have been, you could have been, it could have stuffed right into your entry and then fucking, and then flushed on you. Literally, that could have happened. So this one is risky. There's no edge here. We already exhausted. Here we're in the front. As choppy as this is, we're still clearly on the front side. This is not front side anymore. We exhausted into the area. Here, lucky that we got another push right into the area again. But you can see how we're rejecting again in the area. This is not front side anymore. This is exhaustion, and now we're starting to create a backside. It's starting to sell off. We go back to the higher time frame. It's very clear here, right? Because we got exhaustion, and then now we start selling off. Of course, we remain open to the possibility that this now, perhaps, after all this exhaustion here into a key area, now it's breaking trend. And if this thing comes back, in this case, the vpoc is here at 907, it's testing it right now. The vpoc here becomes less important. More important is that it just takes out the highs, the 920s and 930s. If that happens, this could be trapping here for continuation to the upside. But well, you need that, this happened at this point, I think hours ago. You need to let this kind of like set up and cook and everything. And if it is trapping, maybe there is continuation to the upside, whatever. That's the different story. Maybe there are more trades to be had if this thing takes out the 900s and wants to go into the 26,000 area. That's a possibility, but that's a completely different trade. Not even a different trade, different time of day, different everything. This is something that may or may not happen. It looks like it could be happening right now. But during this run up, when we get the exhaustion, that's it. That's where the edge is gone. Here it's chop. Here it becomes 50-50. Here it becomes, oh, I'm going to go for another long. Well, okay, that's a gamble. Maybe you get it, maybe you don't. No edge there. No edge there. The edge is on the front side when we're still yet to test the target area. That's the basic thing of that. The basic variable, the most important variable of the setup. And again, it starts always, we should never forget this. I forget it all the time. It starts with zooming out and having a good idea of where are we going? Where's the next level? And how important is that level? And that kind of keeps you sort of like grounded in reality. This thing looks like it actually could be now setting up to reclaim. But I'm going to stop this video now.